Cato, property lawyer and vendor finance lawyer. I'd like to chat with you about how to boost your cash flow for investment properties using joint ventures for vendor finance. Many investors have underperforming properties. Underperforming because the tenants pay late, because there are vacancies, because there are many repairs, and because the properties are negatively geared. Other investors have money in the bank, but they're looking at the dismally low interest rate they're receiving, which is barely covering inflation. They're afraid to invest in properties because they are not sure about the cash flow. Why don't we put the two together? The property investor and the vendor financier. And together they'll go forward with a joint venture for vendor finance. The first step they take will be to sign a joint venture agreement. The joint venture agreement will set out the rights and obligations of the property investor and the vendor financier. Importantly, it will contain the contributions. The property investor contributes the property or the money to buy a property. The joint venturer contributes their skills to find a property and to vendor finance the property. They will share the profits from the joint venture, but they will not share the liabilities because technically they are not partners. There are 4 benefits for property investors, or as we call them, money partners, in doing a joint venture with a vendor financier, or as we call them, a skills partner. Number 1, there are no fees. The money partner does not pay fees to the skills partner. They share the profits. If there are no profits, the skills partner does not receive anything. Number 2, simplicity. The joint venturers come together in a joint venture agreement. They do not need to set up a company structure, a trust structure, or anything like that. Number 3, ownership. The money partner has 100% ownership of the investment property. All that the skills partner receives is the right to control the property to carry out the vendor financing arrangement. And number 4, no more bad tenants. If a person is buying a home, they make sure that their payments are regular and they make sure that they look after the property. So, 4 reasons why joint ventures for vendor finance are the way to go to boost cash flow for investment properties. If you'd like to learn more, visit my website www.vendorfinancelawyer.com.au, and if you'd like some introductions to joint venture partners, contact me through the website.